Hi there and welcome to this edition of Money Talks, where we take a look at all aspects of the rural economy as it affects you in the ag sector. Well, it's been another busy week. The Eurozone remains in crisis with no let-up in sight. We've had a significant budget in terms of tax reform. Chinese interests continue with their bid to buy up local dairy farms, but the Minister of Agriculture says he doesn't think it'll happen. And a Singaporean company has bought Craig Norgate's shares in New Zealand Farming Systems Uruguay, taking its holding to just under 20%, a point at which a takeover attempt can be triggered. Well, James, looking at our currency over the last week, there's been a bit of movement there, hasn't there?
Yeah, there's been significant movement in the currency.
It's pretty volatile, really, isn't it?
Hugely volatile, and it's all been driven by what is happening overseas. We've been down against the US, down against the euro, down against the pound. Been quite dramatic, I guess.
Even though those currencies themselves have been quite weak.
Well, that's right. I mean, generally what we do see when there's a bit of a blip in the global economy, and we did see that over the past year to 2 years, people run back to the US dollar, and that has been what's happening, and that's why the US dollar's come back against almost all currencies.
Are they running to gold?
Well, running back to US Treasuries. Everybody runs back to US Treasuries when things go a bit bad, and they perceive that as being very, very safe, and that really drives the US dollar.
Right. And how is the Kiwi trading against the Aussie?
Yeah, we've been picking up against the Aussie. We were down in the late 70s for quite a while there, and now we're sort of over 80 and looking reasonably steady. And that's really coming down to potential for New Zealand to increase the official cash rate pretty soon, and that relative against what's happening in Australia. Their outlook sort of looking at they're at 4.5%, and they're looking like they'll stay at that level for a while now, and they've made their big changes that they need to make. And whereas New Zealand, we need to probably need to start thinking about some increases in the OCR.
Now, commodities have been selling off because of what's going on in the Eurozone, I guess. What's happening there?
Well, when you look at the big commodities, oil, some of the metals, that sort of thing, then they have seen a big sell-off. Oil was trading sort of up to $86, $87 US dollars per barrel, and was under $70 per barrel just recently. So there's been a huge change there, and it's really all of those commodities can be speculative, but also big drivers and a good indication of where markets are seeing the economy going and where demand's going. So if there's a bit of uncertainty about the outlook, then we typically do see the commodities pull back, and that's exactly what we have seen.
Crystal ball, what do you think will happen with these commodities down the track?
Yeah, it depends on what we see out of Europe. There has been a real shake-up, but we can't lose sight that the global outlook has actually improved a bit recently. Out of the US, Europe's their economy has been looking quite good. I guess it's whether or not we see a big change, or whether this really escalates into something quite significant, and there is potential that it could. So if we do see things settle down a little bit, then the fundamentals behind some of those commodities are still relatively good. So I would expect to see them increase in time, albeit depending on what happens, what the outcome is in Europe.
Yeah, there might be a few ups and downs on the way if the graph does finally tend to trend upwards, though.
Yeah, I mean, we're in a volatile world. I think the only thing we can be certain of is that there's going to be changes.
Now, turning our attention to the individual sectors now, more good news for the dairy sector, with farmers with Fonterra, I should say, announcing a opening forecast payout of between $6.90 and $7.10 for the 2010-11 season.
Yeah, I mean, this is a huge boost for New Zealand economy, for rural communities, and for dairy farmers. They've had a good shake-up over the past year, and it really shows. This, if it comes through, it'll be the second best payout on record, and Fonterra signalling some upsides there. So it's a good indication that we're seeing strong demand for our dairy products. I guess the key uncertainty being what develops in the next little while.
Exactly. Still not quite the $8 that we were bandying about here last week.
Yeah, well, the $8 was talked about in their announcement yesterday. Not quite there yet, but still couldn't rule that out in time yet. Yeah.
And what about the other sectors? Sheep's looking pretty strong still, is it?
Yeah, sheep's looking pretty strong. I guess the little bit of weakness against the pound over the last week, although hasn't been significant, would be good news for the sheep sector in terms of beef. US beef prices have actually pulled back quite a bit over the past 2 weeks, and we were talking earlier about oil, and that's those sorts of factors have been affecting meat prices in the US, and now we are actually starting to see retail prices in the US pick up. There has been a bit of a lag because the wholesale prices have been high, so it'll be interesting to see what US consumers do, because they're still pretty cost conscious.
Do beef prices tend to go up as they head into summer?
They have been through to Memorial Day in the US, which is actually on Monday. So US beef prices do sort of tick up over the past 2 weeks. And there's been quite a bit of slaughter, and that's I guess slaughterhouses in the US have been making good use of the higher prices because they are at very high levels.
How about venison? Briefly?
Venison, that's still we've seen prices pull back over the past year, but they're still relatively good, and they're sort of in a bit of a similar state to the lamb industry in terms of the European markets, and still highly susceptible to supply shortages. So it depends, I guess, what happens out of Europe, and that may have a bit of effect on venison.
Thanks for that, James. Now, next up is business commentator Bernard Hickey, who'll join our panel to discuss the business headlines making the rounds over the last week. Welcome back. Well, we now know what Bill English had in his budget, and although there were still plenty of pre-budget leaks, as predicted on this program, the tax changes still came as a surprise. While there was widespread approval of the changes and plenty of political rhetoric about the widening gap between rich and poor, I guess the biggie for farmers, Bernard, was the reduction in company tax to 28%.
Yes, the cut from 30% really surprised a few people, because New Zealand is jumping ahead of Australia for the first time in a while. For farmers, it is an interesting change too, because many people will have family trusts, and we now have a family trust rate at 33% and the corporate rate moving to 28%. So some people may wonder if they're actually better off with a corporate running their farm rather than a family trust or a simple personal income tax arrangement.
I wonder if there's a way around that for farmers.
Well, there's no doubt a whole industry of tax accountants and lawyers who'll look at whether or not they can minimise the tax that comes out of it. But certainly for farmers and for business generally, a cut in the corporate tax rate is a good thing. And the overall theme of the budget, which is to stress investment in the productive sector, including farming, and away from the property sector, is a good thing.
Absolutely. But apart from those changes to the tax regime, there really wasn't much else for agriculture in that budget, was there? There
were a few downsides, particularly the removal of the ability to claim depreciation on buildings lasting longer than 50 years. I mean, some farm buildings are not going to last 50 years, but there will be others that do, and that will be a bit of a blow for those people who claim depreciation on those buildings. Also, I would have thought
that'd be a bit of a holy grail for a Minister of Finance to take too.
Yeah, and it shows how serious they are about pushing rental property investors and those who are betting on capital gains to look for more productive use for that capital, which I think is a good thing. It also suggests too that the change in the depreciation on plant and equipment will affect some farmers, and there will be a few foreign-owned farming operations, pretty rare though, who will be hit by the thin capitalisation rules, which effectively force them to reduce their debt and reduce the amount of interest expense they can put through their tax claims. So there are a few positives, there's a few negatives as well. On the whole though, this is a budget for restructuring the economy, not necessarily benefiting one particular interest group over the other.
Yeah. Now internationally, where does this budget put us, James? I mean, I guess we're lucky that compared to many of the world's economies that who don't have the luxury of using tax cuts to stimulate growth, we seem to have been able to do that.
Well, Bernard made the point that we've jumped ahead of Australia, so
exactly.
they perhaps haven't felt like they've had the luxury to drop the corporate tax rate down to 28% just yet. So I think that's really positive. In terms of our deficits and things like that, then we've probably, this budget did show that we're over the next year, then we we're going to need to borrow a bit more money